Hi, guys. I welcome you to this very interesting topic of computation of book value per share. This is a very important calculation in financial accounting that is of much concern not only to the management of a company but to the investors who invest in the stocks of a company in the stock exchange. The most important thing is that the book value gives us an idea as to what's the worth of the assets of the company that are supporting one share of the company. And also, it gives us an idea as to whether shares of a company are underpriced at the stock exchange or overpriced at the stock exchange. So, both these situations are quite possible. And also, investors look at the book value of a share before making investment decisions. So, an example follows that will illustrate the computation. So what I got here is an extract from the balance sheet of a company. So it's not a complete balance sheet, but only that part of the balance sheet that gives us information relating to the investment in the company. So you know very well that investment comes in the shape of stocks, and the stocks could be preferred stock or common stock. So the next slide gives us the details of the investment in the company, and then we'll follow on from there. So as you can see that we got stockholders' equity. So that is the money that is invested by investors in the stocks of a company. And the first item there is preferred stock. $6 preferred stock means that company is committed to pay $6 per share to the investors every year. And then $100 is the par value. So par value means the face value of the stock. So one share of the company has a face value of $100, and callable at $102 means that if at any point in time the company wants return of these preferred stock, so company will be bound to pay $102 per share. So that $2 that is extra payment committed by the company is an incentive for the investors to bring the shares quickly and get the $2 extra on each share in return. And the company is authorized with 300,000 preferred stock. And the value of these shares, as shown in the next column, is $12 million. So that is as far as the preferred stock is concerned. And now we come down to common stock. And $5 is the par value of the share. So that means one share has a par value or face value of $5, and 6 million shares are authorized, out of which the issued shares value $10 million and subscribed shares value $4 million. Subscribed shares are those where the full payment has not been received from the investor. So some amount will be received in future, and the note down below says that $7.2 million is receivable from the investors who have invested or who have subscribed in the common stock of the company. So $10 million and $4 million add up to $14 million. That is the total worth of the common stock. And then we got additional paid-in capital. So additional paid-in capital actually means the premium that is received by the company by selling the shares. And the preferred stock has the premium 360,000, and the common stock has premium 30,800,000, and that adds up to $31,160,000. And then we have retained earnings. So retained earnings are the profits of the company that have been retained in the business for future eventualities, and it amounts to $2,680,000. So these are the investments in the company that add up to $59,840,000. And now in the next slide, I'll show you the computation of the book value per share. Right. What we got here is the computation of book value per share. And the bottom line in the previous slide, that is the total stockholder equity, was $59,840,000. So that is our first figure over here. And then claims of preferred stockholder are deducted from this total stockholder equity. And how we got this figure of 12,240,000 is that we have picked up the number of preferred stock issued by the company, and we have multiplied that number of preferred stock by $102. That was the committed amount whenever company will call back the preferred stock. So we multiply the number of shares by $102 to get the figure 12,240,000. This figure is deducted from the total. So we get the net amount, that is 47,600,000, and that is the part of the stockholder equity that relates only to common stockholders. And then we got down below the number of common shares issued by the company, 2.8 million, and we divide the common stockholders' equity, 47,600,000, by the number of common shares, that is 2.8 million, to get the book value per share, that is $17. So I hope you got fair idea as to how book value per share is calculated. And remember that if there are any outstanding dividends to preferred stockholder, then those outstanding dividends are also to be deducted from the total stockholder equity to arrive at the part of the equity relating to common stockholders. So if you have any questions, any queries, my email address is there. You can contact me there. Also visit my other topics on accounting and finance under accounting finance, or under YouTube Sadat Kirmani. Thanks. Also, please don't forget to subscribe to my channel. I'll appreciate that. Bye for now.